Hello, everyone, and welcome to Your Brand, Your Business. Apologies for the echo, but it is gone now. This week, we're going to be talking about quarterly taxes. This should be a shorter episode, because quarterly taxes, believe it or not, are not that hard. And secondarily, because we're both still really tired from E3. Like, I didn't even get a weekend off because we had a whole bunch of family stuff, Father's Day, that kind of thing. So I didn't actually get to sit and play video games like I wanted to because I just bought Slay the Spire on my Switch and my entire plan was play it. And then that plan was ruined by, being a loving family member and stuff. Ernest, who are you? Tell us about you.
What? Who? What? I am Ernest Jones. I am a CPA. I specialize in tax compliance, tax prep, IRS rep for broadcasters, game devs, and anyone in and around the gaming industry. And Galen, you forgot to introduce everyone to yourself.
I'm Galen. I'm a financial planner who works primarily with streamers, which, as I said, what felt like 10 billion times at E3, my job is to help streamers make more intelligent money decisions and fewer stupid money decisions. And those are separate and important.
I want everyone to know that, and even in the VOD, clip it, he cleaned this up vastly because there were laden with swear words. When he would tell people
on how late in the day it was, how much I'd had to drink, how long we were in the sun. Yeah, how long we were in the sun. These are all important factors to how professional that transition sounds. That little soundbite about the business sounds. But anyways, really enjoyed the talk about E3. It's a cool con to go to, but it's also exhausting. But for today, Ernest, what are quarterly taxes and why do streamers care about them?
Okay, and so as we get into this topic, since it's going to be probably a shorter show today, if you have general tax questions that are not specific in nature to your exact circumstance, feel free to ask those at any point. We'll cover those at the end. So quarterly taxes. I had a couple of people come up to me during E3 and they were like, I kind of want to do like quarterlies. And the way they talked about it in a way where they were talking about some sort of mythical creature like a unicorn or something. And they had heard about it, but weren't really sure what it entailed. And actually I helped a few broadcasters today kind of sort and square away their quarterlies and a few other people as well. So at large, this is what quarterly taxes mean. You pay the IRS an estimate of what you owe for the quarter. So let's say your tax bill is roughly $1,000 for the year. You should be cutting a check of about $250 today. And so that's all it really is. Now we'll put a pin in it when we get into some of the nuance and the complications. But Galen, on the planning side, why would you want to make the payment today? Like, why don't I just wait until April 15th?
So that when April 15th comes around, you don't go, oh, $20,000. That's a lot of money. Crap. With the way that our brains work, if you pay things more routinely, you are less likely to feel the pain of the payment because it won't be as big all at once. Even if, say you owed $20,000 and you paid $5,000, $5,000, it's still less painful to do it that way than it is $20,000 all at once. There are also some penalties and interest and stuff like that if you don't do enough payments over the course of it. But realistically, it's to make paying taxes less painful for you. Also, just on a practical perspective, doing the little bit of work that it takes to figure out how much you should pay in a quarter goes a long way towards making your tax time math a lot less painful because you've already done a good chunk of it. And assuming you didn't then, run around and burn all of the receipts that you used to make that, calculation for your quarterlies, you've saved yourself a lot of time. You're just more familiar with what you spent over the past quarter than you are over the past year.
Well, you have a really good saying for this generally from the finance side, and I was trying to remember it when you were talking there. It's something about how, if you have cash in your bank account, you're just going to, unless you're very disciplined and you're thoughtful about it, you're just going to spend it, right?
Oh, yeah, absolutely. Oh, yeah. The human impulse is if you've got the resources sitting there, use them. And that makes a lot of sense from the sort of, overarching time, span of humanity. If you had resources, it made sense to use them because you probably weren't going to have them in the future. But when it comes to things like money nowadays, or food nowadays, um, you have to be more prudent than that. Basically, you have to look further than that. You have a reasonable anticipation that you will survive the winter, so it makes sense to it makes sense to set up systems that make it harder for you to fail to do the practical prudent thing. And one of the things that really helps with that on the money perspective, if you're self-employed, which, as we've talked about a billion times at this point, you are as a streamer, um, then it makes sense to do that periodic payment so that you aren't as likely to screw it up. Basically, you aren't as likely to accidentally spend something that you should have been saving for taxes. In fact, my clients who do the best with their quarterly taxes are generally the ones who have set themselves up on a monthly payroll, so they're actually paying it monthly, not even quarterly. And that just makes it less possible for them to screw up.
Yeah. I don't have anyone that's doing the monthly yet on the payroll side, but the people who do the quarterly payments, I had a few people actually get a refund and they were stunned. Just because,
Yeah, and that's nice too, isn't it?
Ended up a little lower and like, well, look, let's just apply it forward, and then they were set. So Tom asked the question, hey, can we talk about who's legally required to file taxes quarterly? I think LLCs who make more than $250K annually are required to file quarterly in California. So one thing I want to point out and bright underline, was someone I was working with today was like, wait, I don't actually have to like file paperwork or anything. Really, all this is an estimate as to how much you think you're going to owe. So what we did was we looked at last year's return. We lined it up against how well they're doing thus far for the year. And from there, we said, okay, well, like, are your expenses going to change? Do you foresee any big things that's gonna happen there? And so that is one thing that we looked at and we said, okay, look, I would make a payment of this much, and then we took the step back and we said, okay, well, from a cash flow perspective, do you have any major expenses coming up where you're okay paying maybe a little later come April 15th because, you want to have cash available for other needs, right? That's the juggling of the business owner.
Mm-hmm.
Now, when you're talking about LLC specifically, there's a lot of things that could go into that. Are we talking, payroll? Because if you're on payroll, you've got depending on how much you're paying yourself, you may have to do biweekly deposits.
Well, in California, it's the 250K piece is the franchise tax boards, or is at least partially related to the franchise tax boards piece where you pay, it's like $800 or some percentage of revenue,
1.5%.
I think it's like that, and then once you cross 250, or I forget the exact numbers on it, but that's more of a California thing than it is a national thing. California really, it knows that it's a great place to be for conducting business, and it's a great place to live, and they basically know they've got you by the balls, so they charge like that, or tax like that, I guess, not charge. The actual, as Ernest was saying, I actually feel like he didn't emphasize this one thing enough. Once you know how much you owe approximately quarterly, the actual process of paying your quarterly taxes is super easy. It took me less than 10 minutes. It's literally just go to the IRS's direct pay website, click make a payment, put in estimated, and then enter in some verification info about you. So your business, your business's tax identifying number or your social security number, compare it against your data from your past tax return, and put in your banking info, and then hit submit. I mean, again, like the whole process is 5 to 10 minutes, assuming you know the number that you're going to put in for how much you're going to pay.
Yeah, I mean, the client, we spent more time just
no paperwork.
Right? Yeah, no paperwork. We spend more time type of catching up on various life things, just business things they had going on. Mm-hmm. And so, one thing is like, well, I really don't know how I'm doing this year. Let's say you have awful records, right? You just have bad records. Mm-hmm. Well, I still want to make it quarterly. How do I go about doing that? Okay, Galen. So I'll give you like the one extra piece on this. I'm a client. I don't really know what I've done. I haven't really kept up on my books. I think I'm doing about the same, but I'm not sure. It could be better. I did a couple of activations. That's different. I've got this big game. My stream kind of blew up, and I just haven't had time to keep my books and records up to date. Mm-hmm. But I did file 18. So I did file 18, and I know what my liability was then at that point. So how can I make it quarterly? There's your case study.
You could do the 90% of you. Well, you could base it off of what you paid for the previous year, and I think you have, as long as you cover up to 90% of your liability, you should be fine.
It's
Over the course of the
90% if you're under a certain AGI threshold. It's 110% if you're over that threshold. I think it's 200K. I could be wrong on that, but yeah. So the key thing is you do have that historic data to go off of, right? And even paying like a small amount.
Well, any payment you make helps, right? Even if you don't get the exactly right number, any payment you make towards it reduces the amount of potential like penalties and stuff like that you owe come tax time.
And specifically with the variable nature of broadcasters, I've had some people tell me summer is super lean, right?
It's super lean for my business, that's for sure. Summer sucks.
Yeah, and some people tell me no, that's not the case. Like summer is very busy, and I've heard the same thing with the end of the year holidays. For you and I mean, I'm going to speak more for myself than you, but correct me if I'm wrong, Galen. End of year is busy, and start of year, super, like you're just
people are running up against deadlines. People are making promises that they won't do that again the next year. Basically.
Yeah, exactly. And so
they feel pain, and then they go, wait, how do I get rid of that pain? And then they realize, wait, working with these guys helps get rid of that pain. That's why it's busy. And then in the summer, they're like, I want to go outside. And then they don't talk to us.
Especially if you're in those like Midwest or Eastern states where the snow melts finally happened. But the other thing is, let's talk about, well, what if you make a mistake and you underpay or overpay? If you overpay, you can just correct it on the next payment, right? So the prescribed timing for quarterly payments are the 15th of April, June 15th, September 15th, and January 15th. If it falls on a weekend, it just rolls to the next business day. So like,
for example,
why
it was the 17th this time.
Exactly. And so now here's the thing though. I have someone that's like, well, I want to pay some of my monthly bills before I figure it out and like figure out how much cash I have available. I get what you're recommending me. This was a true conversation I had today. I told that person, look, I get it. Make the payment tomorrow or end of week, worst case. Like figure out what you have available and let's make the payment. It's not end of world if you don't make it on the exact date. IRS will take your money.
Yeah. So, I mean, but that goes to the sort of clarification that Tom and Nation said, which is, are you legally required to? No, the IRS is not going to throw you in debtor's prison for not making your quarterly payments. Basically, regardless,
they're going to get a little mad.
Wait, what happens is they charge you money for screwing up, but there's no like other ramifications besides it costs you more in tax, in penalties and fees, kind of thing.
I have someone. Yeah. We have this talk every year when we finish up the return where we've got, so this person is set. This person is S corporation. It makes sense for them. LLC filing as an S corporation. They're on payroll. They're funding a sheltered account because they have the available funds to do that. They lead a very lean sort of mobile life and have variable income, do sponsorships and activations that are doing very well for themselves from my perspective. And every year we finish the return probably around February, March, late Feb, early March. And I have this conversation. Hey, dog, do you want to make quarterly payments? I know you say every year you'd rather have the cash on hand. This is your penalty. And every year this person says, no, I'd rather have the cash in my account. Right? And that's fine. That's a decision. Like they've actively taken in the information. They know they're going to owe X amount. Hypothetically, I'm not saying they owe this. This is just the number I'm pulling. Let's say it's $50,000, right? So they should have made quarterly payments of $12,500 to the IRS. They're like, nope, I want to do it this way, right?
Which is fair. You can make that decision. You can totally make the decision to incur interest and penalties and stuff like that if you feel as though you have a reason stronger than that to hold on to the cash, which could be, like you were saying, pay bills that are coming up, which could be theoretically you think reinvesting that cash into your business over the next year yields a higher return
than the interest you're paying.
The one I don't get is the people who say, I don't want the government to have my money, because it's like, you're going to pay them more money if you hold off.
There's one of the go-to tax sayings is it's pay now, pay later.
Yeah.
right? So it's either you pay it
Pay now
now
or
or you
pay
pay
more
later,
later.
or pay more later. And no, absolutely. Um, and some people like doing the quarterly. Some people, try to split the difference and have an extra, like they'll skip the April one and they'll do 3/4, they'll chop it into thirds. It's just, how you want to do it.
You should set up a regular schedule and do it on that regular schedule. I mean, that's the real answer. You should do it in a way that causes you to screw it up the least by having it the most routine.
Well, and the other
We are
thing is,
creatures of habit and routine.
if you are doing well enough where you want to potentially do some sheltering, or maybe you want to buy some equipment at year end to lower your burden, your tax burden, paying quarterly, if you're not disciplined with your cash available, that allows you that flexibility, right? Because you're not also planning for April 15th taxes, year-end holidays, with family members and friends.
You have a better sense of what you actually have available to you as opposed to what is going to the IRS.
Exactly.
Yep.
And then, so I want to kind of underline that question. Hey, who's legally required to pay taxes quarterly? Assuming you're that example of that person I laid out where they just make a big check at April 15th, you're okay. The IRS doesn't like it. But now here's the case though. If you aren't doing quarterly payments and you're constantly falling behind on your taxes, they may eventually take action where they will like levy an account or do something like force withholding on it.
Mm-hmm.
And so that's a circumstance where, you should have been doing it. But usually, and not even usually, you will receive correspondence from the IRS that like you get a warning, right? It's not just going to come out of the blue. Oh my goodness, look who just joined the chat.
Aren't you supposed to be at work, Joel?
Wow. Yeah, and as Joel said, it's better to not get warnings from the IRS. Oh, poor Joel. He's hearing our dulcet tones.
I bought this mic 7 years ago, for the record, Joel. It's just in frame now. That's why I sound better. You think you're too small to care about quarterly taxes? Yeah. I think that's very fair. Like, for instance, in my household right now, my wife still earns most of what our household brings in. Like, I earn money, but my business is growing. She earns most of the money in the household. We could elect to withhold a little more from her paycheck and really reduce the need for me to pay quarterly taxes at all.
And one thing for people to get their head wrapped around is that withholding effectively is the same thing as quarterly payments, right? What you're talking about is paying money to the government to go towards your 2019 tax bill. So whether it takes the form of withholding or a quarterly payment, that's the same thing from their perspective.
On that note, so I sent out an email to all of my business owner clients today saying, hey, quarterly taxes are due today. And I got a call from one of them basically saying, oh gosh, is that something that I need to do? But this is someone who runs a business that has multiple employees where they pay themselves on payroll. They just purchased the business at the start of this year, so they weren't super familiar with it, but they work with a good local CPA who had them all set up to do things in a fairly automated way. So I was able to walk them through, no, you've actually been paying it more than quarterly with the withholding from your monthly paycheck, so you don't have to worry about this at all. I had included them because they were a business owner, but, quarterly is sort of the minimum that they look for to make sure you're doing somewhat routine throughout the year payments. But if you're getting paid twice a month and money's being withheld from that check twice a month, and that covers the majority of your tax burden, then you should be fine. This is if you're the case of a business owner who's earning the majority of their income from that business and isn't setting themselves up on payroll where they're routinely paying taxes.
Yeah, I mean, I'm going to look up an old historic return right now and talk about like what this like quarterlies are in the prior year. Mm-hmm. And this is someone I was just reviewing for like, hey, did my accountant miss anything, sort of thing. And so as it's getting generated right now, but I think it was like $250,000 every quarter. Like that's much more significant, right? The IRS is going to be like, hey, you need to be paying us quarterly.
And again, that's the kind of thing where your scale matters. If you're earning $20,000 from your side gig business, and yeah, you owe some on it, but it's not a ton, your penalties might not be that much if you don't do it. But if you're talking hundreds of thousands of dollars in potential tax owed because you're doing so well that you're earning that much, then it becomes a much, much bigger deal. You're talking about like someone else's annual salary and your penalties and interest at that point if you're not, if you're not being prudent.
Yeah,
So it's always looking at your risk, right? What is your risk if you don't, what is your risk if you don't make these payments? And if it's not much because you just won't owe much in taxes because you aren't earning much from these business activities or these non-withholding activities, then it's not that big of a deal. But if you're someone who's earning, high 5, low 6 figures and not exclusively through a business and you're not paying quarterly taxes, then you're looking at a pretty hefty tax bill come year end, and that'll hurt.
Yeah, and I really like Joel's kind of bellwether rule, right? If you have a day job that's producing more than 75% of the total take home, then you probably don't have to worry about it. If it's more than that, then maybe you want to look at it. You kind of have to look at it from your own household earnings perspective, because here's the other thing. I have seen people think they're fine, and they put, they're not withholding nearly enough from their W-2s, right? Like they think they're covered.
You should still review it. You should still do it intentionally, but it's possible to set it up that way.
Yeah, and the IRS actually has a good tool to determine, like, hey, am I withholding enough? Like you can input all that stuff as well. One other thing I wanted to mention was type of adjacent to this topic, being able to figure out how much you owe and being able to pivot and make that determination. We talked about, well, you don't have good books and records. This is another reason to try to make sure that you're, current through at least a quarter at this point, right? Like it's June 17th, right? I would expect, and I get it, life happens and you're bad at it or whatever, but if you want to do this right and actually like figure out, dial in your quarterly payment very effectively, especially due to variable income of being a business owner, you should get, so I'm going to be more gracious than Galen. You should be done through March. What do you think, Galen?
I have no fucking clue how you stay even remotely sane if you don't know how your business is doing up to the month at least. How do you survive? Answer me this, people. How do you survive if you're running a business and it's your main source of income and you don't know how much money you've earned and spent? How do you plan anything? How do you do anything? How do you exist in life?
Yeah, it's you hate to see it.
You hate to see it. That's one that always bugs me. I mean, it makes my job easier in a way because I often get to start with streamers and just be like, okay, we're starting with ABC 1 2 3 instead of complex sentences. But still, this is the kind of thing where, again, like I said, paying my quarterly taxes today took me very, very little time because I had up-to-date data and I was able to take a quick peek at it and plug it into an IRS calculator pretty quickly and pay based off of that number.
Yeah, I mean, so can we talk about the discussion we had earlier today about that, Galen?
Well, so we had...
Not numbers, but just more of the...
Yeah. So the discussion Ernest and I had today around my quarterly taxes is that... relates to the fact... Well, it relates to the thing that Ernest was talking about with your cash flow concerns. We'll start with this baseline statement of fact. For a first world country, we sure have a shitty health care system and family support system. The reason that I say that is that my wife is due with our first child at the start of September. So, give or take a couple weeks around there. And she gets 6 weeks of 60% pay from the state of California for maternity leave. Her company's small, so they don't offer any maternity leave. So it's all the state stuff. So, if she wants to take more than 6 weeks off after giving birth to a child, that's at 0% pay. So the conversation that Ernest and I had, Ernest being my tax guy, for the record, is that, hey, odds are my wife is going to earn less money this year than she would in a normal year, right? Because she'll have probably 2 months without pay. So given that, that's time where she's not withholding taxes, but she's also not earning income that would be taxed, right? She's not earning any money. So the question from me was, do you think I even bother paying quarterly if we just anticipate that my wife will have 2 months of no earning and therefore our taxable income will be dramatically less, and we'll get the child tax credit and stuff like that? So that's the piece where it comes to paying quarterlies that depends on your situation, your family situation.
What I was telling people today. That's the more art than science piece of it.
Exactly. So it's not just the general good practice is pay quarterly taxes because then you aren't saddled with a huge tax bill at the end of the year. But there is the art piece to it, as Ernest was saying, about what do you have coming up in the future? What can you expect? Because of course, with the model that I have for my business, which is fairly recurring revenue, we can expect that the first half of the year will be significantly less money than the second half of the year, just as I bring on clients through the business. But then that also ties in with the part of, and my wife's earning zero income, right? So at its most basic level, you can do what we said earlier, which is I expect to owe this much in tax over time, over the year, based on my projected earnings. Therefore, I will pay a quarter of that every time a quarterly payment is due. The other piece of it is look at your, that you can do to be more advanced is look at your actual situation, figure out what actually is going to apply to you. But yeah, that is it at its most complex. At its simplest, it's not hard at all.
And what I've seen for the most part, with a few corner cases here and there, like a big game launch or just the stream exploding for, they're in a directory and things just hit, is that it's actually, as long as you're consistent, pretty stable year to year. Like maybe there's some growth, 5% growth. Maybe you get to the point where you like hit that corner where, the stream really pops and you're doing a lot better comparatively. So in those circumstances, like you build in 2% growth, 3% growth, and you just take last year's liability, you quarter it or you third it, depending on how you're paying it, make the payment. Not a whole lot of, it's just kind of a very like hatchet approach as opposed to a scalpel. Like, so, what Galen and I did was we went through like, okay, here are the assumptions, here are the figures. Let me run this out. How is this running? Based on assumption 1, 2, 3, 4, and all of this aligning, this is what I expect the year-end tax liability to be. So you should be making payments of this much to get to zero, right?
Yep.
But then because of, life circumstances,
how
much
do you
actually want
diapers
to
and, stuff like that.
Expired car seats.
Yep. No, buy not expired car seats. I have an expired car seat that someone gave us. I need to buy a not expired one.
Can you even return those out of curiosity?
We didn't buy it.
Gift receipt.
But the whole point of it being expired is it's over 6 years old.
Oh, okay, gotcha. I didn't know.
That's the whole purpose. That's the whole.
My perception of this. So Galen had a tweet. A very quick aside. They were saying like, "Did you know car seats expire?" And I was like stunned. And
the industry is a sham. I'm not going to disagree with Joel on that. To Tom's question, husband and wife owning an LLC together, you shouldn't need a K1 for that. If it's already a disregarded entity, a pass through, they're considered one individual, right? You don't need to be issuing K1s.
So there's a lot of nuance here because I would like to know. Well, no, hear me out. So I'd want to know how the LLC is filing, right? Because if it's filed historically,
disregarded entity just means it's not considered separate from you for tax purposes. As in, so like a C corporation, like most big companies in the world, earns money, it gets taxed at the corporate level, then it pays people out, and then those people pay income tax on it. Versus a smaller thing like a streamer who's an individual LLC, it's the tax that you pay is just on the personal return. It's not at the corporate level.
And so he already answered the question. He said it's historically filed as a single member LLC.
Yeah.
That's fine. Yeah. So you can continue doing what you're doing.
Tom, I live in California as well. Technically, my wife is a part owner in my business, right?
And the reason I was saying there's some nuance there was if you had a filing history where you were filing as a partnership or a separate entity.
I guess if you were like a husband and wife team where you're both providing different professional services under the same roof or something, like.
Well, and I go to filing history. Like, say you registered the EIN as a partnership. Yeah, and it happens. Or you filed or you made the S election. Even if it's a single owner, there's an expectation that return will be filed.
Right.
but you can unwind that. So kind of generally speaking, and for your situation, Tom, you're fine to continue doing what you're doing based on what you presented. But for other people listening, it depends on your filing history, right? Like there's no reason why in a community property state, spouses both own a LLC, right? You can still be a single member. But, depending on what you've done or how you've set up, mistakes you've made, you could have a separate filing responsibility that may need some cleanup.
Yeah.
So that's all me being very long-winded, because that's like cool nerd tax stuff that you can do. So let's go back to quarterly. So we talked about you're not actually filing any paperwork. You can either use last year's return to estimate it, or you can dial it in using this year's tax figures to get that going. On Tom's, we talked about LLCs and some of Tom's questions, but yeah, K1s, I would never recommend someone doing it themselves. If you're like at that part of your nuanced tax structure, it's not impossible, but I just wouldn't do it.
Yeah.
What else we talked about? Managing the art of, hey, do I make a payment? Do I not? How much do I make? That's where you talk to someone like Galen, or look at it yourself and figure out, okay.
You talk to someone like me, and I'll point you right to Ernest. At least for the numbers piece.
And on the numbers piece, but talking about looking at your whole financial.
Oh, okay, got you. The projections over the year and stuff like that. Yes, that part I do.
Yeah, and so that's very important. And then, setting up a system in place, I would say this should have been on your radar if you needed to make this already today. Again, not the end of the world, don't, have a panic attack about it. But I would say you should probably need about a week's lead time, I would say, just so you can look at some numbers, right? And look at your financial picture as a whole. Because let's say for whatever reason, life happens, right? I have someone who is injured and can't really work like a full-time 8-hour shift, right? But let's say in that example, for 6 months of the year, they were working 60 hours a week. Mm-hmm. This thing happens and now they can't work and income's all gone to pot, right? Well,
so in the weed business?
Yeah. Oh, well done. Listen, you still haven't approved investing my money in a ICO for a dispensary.
Never
we'll talk about this off stream. But tell Galen to let Ernest live. Anyway,
you say it in jest, but I actually hear people talk about that.
Am I in jest? Okay, but let's say though, let's say the back half of your year isn't going to bear any income, right? You would want to adjust your quarterlies where you may be in a situation where you're actually going to be in a refund now because of how your income is split, right? So you want to constantly be reevaluating it to figure out.
I mean, I had a year where I worked half the year as an extremely well-paid tech consultant, and the other half of the year I was a grad student not earning any money. Right. Yeah, so based on the first half of that year, you're like, oh, Galen's going to owe a shitload in taxes because he's making a lot of money. And then the second half of the year, it's like, oh, he's a poor grad student. He's actually costing money for the family.
Yeah.
Right? Those kinds of things can really make a difference. And that's the kind of stuff I do, is sit down with people and talk through those kinds of things so that you can make more personalized answers to what at their core are straightforward questions like paying quarterly taxes. That's where they get a little fuzzier and a little more personalized.
Yep. And life happens, right? So,
true.
I can't. Oh, go ahead. Sorry.
No, I was just saying true. And life happens. Sometimes you best laid plans, and then something happens, and you're completely different by the end of the year.
Right. And one thing, a statement I really like, and I'm butchering a little bit, is you really don't plan for one-offs, right? Like you were saying earlier, you put systems in place that yield, that make you productive and yield the best results that are practical for you.
Yeah. My budget says I'm spending $50 a month on car insurance, but really or $100 a month on car insurance realistically, but actually it's $600 twice a year. Mm-hmm. And that's just a minor example.
Yeah. And so you just don't plan for something going awry or something, great happening.
Yeah.
But you take that information. What was the thing you were saying? Oh, the thing when Gail and I together, he kept going to one of his hammer lines of, listen, you make a decision based on the best available facts and circumstances that you have.
Oh yeah.
Right?
But we were talking about naming my daughter when it came to that, but yes, it still applies.
It's still very applicable. to this exact discussion that we're having. So I can't think of, though, anything else on this topic area that we need to hit.
No. And part of the reason
Yeah.
that we said at the outset of this that this would be shorter is because quarterly taxes, while seeming scary if you've never dealt with them before, actually at their core are pretty straightforward. There's not complex paperwork you need to sign. You can pay online via the IRS website.
IRS.gov/payments.
Exactly.
IRS.gov/payments. IRS.gov/payments.
And as long as you're doing something, you're doing a better job than if you're doing nothing.
Yep. And the other thing is, with the exception, like say you owed 10,000. That is the link, Wes. Let's say you owed 10,000 in taxes, right? And you pay, 2,500 a quarter. It's not going to. Whoa! What just happened?
Tom got timed out because he entered a link and he's not authorized to enter links.
Get wrecked. But very quickly, it's not going to significantly alter your tax liability. You're still going to pay 10,000 in taxes. It's just a matter of timing. Yeah, you save on the interest and the penalty, but it's not. You aren't suddenly going to owe only 5,000 in taxes by doing this. So I want that people to keep that in mind as well. Is that this isn't going to change your year-end how much you've actually paid. It's just timing. So.
And it's timing that helps you avoid penalties if you are someone who will owe a significant amount at the end of the year because it's not being withheld normally.
All right. So I think we've covered everything, unless you have something, Galen. So we'll toss to any other questions that we have. And as people are thinking about that, Galen, what are you up to after recovering from E3? Or how are you even recovered yet?
I've been playing Slay the Spire. That's all I've been doing. It finally came out on the Switch. And that's also all I want to be doing in general. Beyond that, I was like I was saying, summer is a slow time for the financial planning business because people don't want to talk about money when they could be outside or on family trips and stuff like that. So what I'm doing now is all of the super fun going around. Hey, we should get started. You should make sure that you pay me, which is wonderful. And then I'm also prepping for the whole having a kid thing.
How are we doing on that prep? Where are we at on it?
Katie's quite pregnant, and the room on the other side of this wall is more clean than it.
The cat room.
Exactly, is more clean than it used to be. So improvements.
Okay.
We have not yet fully removed all of the cat's various chairs and hiding places that they so love that will not be there forever. But we are slowly moving on those things.
Very cool. I mean, slowly. You got 3 months. You got plenty of time, right? Like
theoretically, we have 3 months. Yeah.
Oh well, I guess that is true, right? There's not a. Listen, you tell that kid to put a Calendly schedule it, and so everyone knows and everyone can plan their lives accordingly. Yeah. This is how I'm told. This is listen.
She doesn't listen to me. She doesn't follow any directions. We have family members who we live near who still have never felt her kick because she kicks just at random times. And there's no way to predict it.
Listen, I'm going to solve this child rearing industry. Okay. And this is the first step. This is the first step is you tell that child, you put a screen or something or a mesh thing.
Yeah, Joel, have you considered that with yours that's coming up?
Yeah. A sort of a way to communicate through there's this study
Ernest,
for people. Hold on. There's a study for someone who was in a coma, right? And they put on this helmet and they constantly just think up, right? And eventually they're able to ring the bell in this circumstance and answer in the affirmative, right? And the reason I remember this story, and this is great, is because they wanted to train, this was a father, and the daughter wanted to ask for the blessing for marriage and demonstrated a million, what day is it, blah, 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 was able to answer. The daughter asks the question, no blessing. Heart-wrenching. And so it's one of those stories you read and it just sticks with you.
Topical to quarterly taxes, though.
I feel like that tangent, though, will go in the Hall of Fame.
I feel like we can end on that tangent.
Yeah, I see no questions. Let us know if you have any show ideas. Galen is.
We are working on we got some questions about insurance when it relates to a home-based business and stuff like that. I am working on. I mean, I have some background in that, but I am working on getting someone who would be a good guest for that too, because that's one of those areas where there's a lot of nuance, and it's very different for a home-based business than it is, a store in a mall kind of thing. So I'm
Yeah,
working on getting someone for that. We will
there's
have
much
that show once we do.
lower slip and fall risk at a home business.
Exactly. Well, the home insurance stuff we'll talk about in a future episode when we actually get someone on who is, frankly, more qualified than me to talk about it. Ernest,
Okay. Hold on. I have to give Joel the business. There was this politician, and the politician said, real estate taxes don't, or I'm sorry, estate taxes don't matter because only an idiot would pay estate tax. And now Joel knows that world so well. Can I pitch a question to you here about it, or just DM for a future question? If it's home insurance stuff, probably we're going to kick that to a future show, Tom.
just so that in the StreamerSquare, there's a Your Brand Your Business thing. That's where we track a lot of those. Ernest, who are you? What do you do?
My name is Ernest Jones. I am a CPA. I specialize in tax planning, tax preparation, IRS representation, and pretty much anything related to United States taxes for streamers, game devs, and all the like and supporting industries.
And how much did you save a client today?
Okay, listen. So thank you, Galen. I was on phone with IRS for this specific client.
I on phone.
For over the past 2 weeks, including the IRS audit that we went through, but just the past 2 weeks, probably 15 hours, right? This is me working on behalf of the client. Assuming it goes through, we will have saved them $51,000 in penalties and interest. So, listen, that's a feather in my cap. That's like POG, 51,000, POG. Yeah.
I think the best I can claim is 17,000, so you're doing better than me. And that's only in deferred taxes. That's not even in permanently saved.
Well, I'll have to get with Joel later. Not an OIC, was penalty abatement. So, Galen, though, tell us all the wonderful things that you do and who you are and yada yada.
Yep. We talked about this at the start, but I'm Galen Herbst Cortina. I'm a financial planner who works with most clients in their 20s and 30s who can afford to pay me, but more specifically with streamers. My job is, like I said, to help people not do dumb shit with their money. And
there it is. He said the swear word.
To do smarter things with their money, both. And yeah, we're on here most weeks. We don't have a topic picked out necessarily yet for next week, but we're on here most weeks. And we try and cover a relevant topic and then take questions. So thank you all for joining us today. We will be back soon. TM. Bye.
Wow. Bye. Have a good night, everybody.